Hello everyone and welcome to today's session. I am Dr. Sonam Badhoria, Assistant Professor at School of Management Studies, Swami Rama Himalayan University. In today's lecture, we are going to explore one of the most vital institutions in India's financial ecosystem, that is Clearing Corporation of India Limited, or it is also known as CCIL. Now, CCIL might not be as commonly discussed as banks or we can say as a stock exchange, but its role is absolutely fundamental in making sure that the financial transactions like they are basically involved the financial transactions like those involving large sums or complex instruments happen smoothly, securely and efficiently. So let's move on the section 1, which is understanding the need for the clearing corporation in India's financial ecosystem. So let's start with the simple example. Suppose two major banks enter into a trade. One agrees to sell rupees 1000 crores worth of government bonds to the other. The agreement is there, but now comes the difficult part, which is the execution. Who assures that the bonds are mutually delivered and they are actually delivered? Who makes sure that the payment happens on time and who will take the responsibility of the payments happen on time? This is where their clearing and settlement systems comes in the existence. The Clearing Corporation of India Limited, or we can say CCIL, was incorporated in April 2001, primarily to fill these needs in the Indian financial system. It was created to handle clearing and settlement functions for various financial markets including government securities, foreign exchange, money market instruments, derivatives, and its main objective is to mitigate risk, ensure timely settlements and uphold market integrity. So, essentially CCIL acts like the invisible but powerful engine that keeps financial transactions running smoothly in the background. So, let's move on the section 2, which is funding and ownership. Now, let's understand who owns CCIL and how it was set up. So, the CCIL was established by key players in the Indian financial system. Its promoters include the State Bank of India (SBI), ICICI Bank, IDBI Bank, the Life Insurance Corporation of India Limited, that is LIC, and significantly the Reserve Bank of India (RBI). These institutions are not just the passive shareholders, they are strategic stakeholders deeply invested in the corporation's performance and stability also. CCIL operates as a public limited company under the Companies Act with oversight from a board of directors and a dedicated professional team. It is also regulated by the RBI as a systematically important financial market infrastructure, which means the crucial for the stability of our country, of our economy also. So, let's move on the section number 3, which covers the core functions of CCIL, or we can say the most important role of the CCIL. Now, let's talk about what CCI actually does on day-to-day basis. It primarily performs three critical functions. First is clearing, which includes the clearing is the process of validating trades, confirming trade terms and preparing them for settlement also. CCIL steps in as a central counterparty. It becomes the buyer to every seller and seller to every buyer. So, we can say CCIL perform two roles at the same time. This virtually eliminates counterparty risk. The second function of the CCIL is settlement. This is the actual transfer of money and securities. CCIL ensures that the delivery of assets and funds is synchronized and guaranteed using systems like DVP, that is delivery versus payment, and PVP, that is payment versus payment. It ensures neither party is at risk of the loss due to non-delivery of the payments on time. Third function of CCIL is risk management. Perhaps its most vital role, CCIL constantly monitors and manages market risk through margin requirements, through collateralization, through default funds and through stress testing. This function is the key to ensuring financial stability even in times of market volatility also. So, let us move on the next section, which is going to explain the key products and services of the CCIL. CCIL operates in several segments of the financial market. Let's look at them one by one. So, the first is the government securities. This is CCIL's oldest and most active domain. It clears and settles trades done on the negotiated dealing system order matching, that is NDSOM, platform for the government securities. Next is Treasury Repo, earlier known as CBLO. Here, institutions borrow and lend funds using government securities as collateral. CCIL manages this platform and acts as a central counterparty, ensuring safety and efficiency. Third role of the CCIL is the foreign exchange. In the USD or INR forex system, CCIL plays a vital role in eliminating risk. The risk of one party defaulting after the other that has paid. It achieves this through PVP, that is payment versus payment settlement mechanism. Next is the derivatives. The next function of the CCIL is derivatives. It also clears interest rate swaps, and which are financial instruments used to hedge against interest rate volatility. Then next is trade repository. In line with the global reforms post 2008, CCIL also runs a trade repository that captures data on over-the-counter derivatives trades. This enhances market transparency and meets global repository obligations. So, let us move on the section 5, which focuses on CCIL's risk management framework. Risk management is the beating heart of CCIL. Here's how it ensures that the safety of the system managing. All members must provide initial and mark-to-market margins. These act as financial buffers against unexpected price. The next is collateral. CCIL only accept high quality collateral, typically government securities. It values the collateral in real time and ensures it always covers the expulsive rates. Next is default funds. Each market segment has its own default fund. If a member defaults, the fund covers any loss so that the system remains unaffected. Then the next is stress testing. CCIL also see how the regular stress testing is conducting to stimulate scenarios like sudden market crashes or major defaults. This ensures preparedness for the market volatility. Next is the liquidity measure. CCIL maintains liquid resources both in cash and banks lines or handle the high pressure scenarios without disrupting the market. All these measures have helped CCIL gain recognition as a qualified CCP under Basel III norms. Let's move on the next section, which deals with the international compliance and recognition. CCIL is not just an Indian institution, it operates at global standards also. It complies with international best practices from bodies such as the Committee on Payments and Market Infrastructure, that is known as the CPMI. Next is the International Organization of Securities Commission, that is known as the IOSC. It has also adopted systems like legal entity identifiers, SWIFT messaging standards. This has allowed several foreign banks and global financial players to trade securely in Indian markets through CCIL. This also builds international confidence in India's financial system and helps in improving the image of the Indian financial system at global level. So now let's move on the section 7, which covers performance, innovation and the road ahead. So let's look at CCIL's real world performance. On any given trading day, CCIL settles transactions worth millions of rupees. These include government funds, foreign exchange, and money market deals. It is continuously innovating, for example, real-time risk analytics, distributed laser technology, that is DLT pilots, enhanced cybersecurity infrastructure. Looking to the future, CCIL plans to expand to green bond settlements, enable cross-border clearing with Asian partners, introduce blockchain-based transparency tools. Clearly, CCIL is not just maintaining stability, it's preparing for the financial systems of tomorrow also. So let's move on the next section, which is the summary and the key takeaways. Let's quickly recap what we have learned today about Clearing Corporation of India. So, as we learned today, the CCIL was founded in 2001 to act as the clearing and settlement house for the Indian financial system. It functions as a central counterparty, removing risk and ensuring timely delivery. It operates across government securities, forex, repos, derivatives, and trade reporting. The risk management framework is globally recognized and robust. It is helping modernizing India's financial market infrastructure and is globally compliant. Thank you so much for joining today's session. I hope The lecture gave you a strong foundational understanding of Clearing Corporation of India Limited, its operations and strategic importance.